Polygon's 𝗲𝗡 has moved up over 7% in the last couple of days. In this video, we're going to be jumping down into the technical analysis of 𝗲𝗡 to see what is going on and where I think things are heading next. Now, as I get into today's video, if you find it useful and informative, smash that like button. It really does help spread the content to more like-minded individuals and helps build out that cheeky community. And if you are new to the channel, subscribe. You can always unsubscribe later and you'll stay up to date with all the video content that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, you are missing a trick. Check it out, linked in the description below. The community is fantastic. They're talking crypto 24/7, and why not immerse yourself and keep your finger on the pulse of crypto by joining us down in Discord. We can continue the conversations down there. Let's go ahead and jump right down into today's video, kicking things off with that 1 hour time frame here for 𝗲𝗡. So this is 𝗲𝗡 paired up with USDT. We're using the BitGet spot exchange on the 1 hour time frame here. So as you can kind of see, we are in a bearish structure on the hourly time frame, right? So you can see that we had this bearish change of character right here. Okay, this was then broken as a break of structure, which I don't like the terminology because it doesn't make a lot of sense when we say that we're still within the structure. But essentially, this here would be more known, I guess, in my mind as a CTS, a continuation of structure. But for the most part, it's actually labeled in smart money concepts as a break of structure, but it's confirming that we're still bearish, right? And so we had this move coming down here. This was confirmed on the 10th of September. And so we did bounce from this low and we're moving on up back towards equilibrium, and we are finding rejection again right now on our 200 EMA, that's the white line, and we're finding brief support here on the 50 EMA, that is the red line. Okay, so for the most part it is looking interesting. It's interesting for a couple of reasons. One, obviously, that we find ourselves sandwiched here, wedged between the 50 and 200 EMA, whilst we simultaneously have a bearish structure, and for the most part our stochastic RSIs are also coming down to the sold area, meaning that we probably have more room to the upside. As I say, we haven't really hit equilibrium just yet. Now, if we go ahead and take a trend line, not the best things to use in the world, but we are getting some respect on these at the moment, so we can't just blatantly ignore them as much as I would love to. If we actually draw these in, you can kind of see that we have higher highs and higher lows. It's great to be able to depict that. And we are potentially going to be looking for another little move to the upside. Now, if we were to kind of look at this and say, okay, this is a rising triangular wedge, this will eventually break on down. Okay, this is not a bullish pattern by any stretch of the imagination, but it does mean that we are more than likely going to find another bounce back to that trend line once again before we potentially see that rejection. Now, if we take the fib scales and we start, measuring these distances, specifically with this little move to the upside here, move this fib over to where we kind of retrace down to, and you can still see that we are in the range, but we still have the ability to push up a little bit higher. Our expectations would be somewhere in this little range here at between 52.6320 and 53.2679. This would look like a B, C structure like this, and you can see it's rising up quite nicely. As well as these mini corrections on the inside, you can also note that we had a mini correction here. We then had another little correction to the downside here, and at the moment we are in that last final one, in my opinion, taking us right back up here. So we still have that potential for another push up a little bit higher, probably more towards the 53-cent range, before we kind of roll this one off and say it is complete. Okay, so that's our expectation. As you can see, rising triangular wedge up towards equilibrium right inside the 53 to 52 cent range as indicated with the yellow box, and then from here we suspect breakdown. Okay, now if we zoom out of this just a fraction, you can kind of see we have to take into consideration everything that happened up here. Okay, with that peak that was at 63 cent. We bounced up again to this area just here, so if I can get that on. And you can see that we haven't yet met our expectations. Our expectations are deeper in this price chart. Now, minimum expectations were met, but our actual target range expectations have not. They would actually be more down towards 45.75 and 47.71. So we can see that on this hourly chart, we still have progression to the downside to be expected. We aren't thinking that we are done with this bear market just yet for Polygon's 𝗲𝗡. Let's move on over into the daily time frame. And so in here, if you zoom out far enough, you can kind of see, you know, the structures that we're kind of in at the moment and some of the fears and worries about these. So we have the February 2023 high. Okay, I'm going to go ahead and draw a little line on there so we can kind of anchor that in, $1.56. And we do have the June 2022 low, that being down over here, and that was in at 31.67 cents. And so we're able to take advantage of some of these great low prices. Anyone who's a member in our Discord will know that I was buying 𝗲𝗡 down here, and we've ridden it up quite nicely. I still hold that 𝗲𝗡. It's a long-term thing. I'm not swing trading out of it, although I could have done so up here and actually made a very tidy amount of money doing so. This break to the downside, though, is very impulsive. We can't ignore this. So if we go ahead and measure, and I'll show you what I mean by this, right? So on our daily time frame, if I take that entire structured impulsive move there, and we put that onto the bounce right here, we can see that this hit the 1.618. So let me show you. So this little wick low went deeper than this Fibonacci 1.618. Okay, that means that we are in impulsive movement, and this was a wave 4, and this is our wave 5. Okay. We start with 5, we must end in 5, although I'm thinking this is probably just our correction, so I'm not too concerned about that. This does look 1, 2, 3, up for 4, got rejected on that 200 EMA, and then down into the 5th. Now, the 5th wave expectation has a relationship between wave 4 and wave 5, which is basically that it will retrace 1.236 to 1.618 times that of the wave 4. And so we can say our expectations are to move 𝗲𝗡 down towards 35.94 to 44.5. Coming into this range, we'll complete this structure and we can bounce from here. Okay, so on the daily time frame, it's looking pretty reasonable for that. Take this to the weekly time frame, and you can see that we are still looking for this progression to the downside, and we have this mapped out as an A, B, C structure. And it's possible that, you know, maybe we don't go down this far, but this is kind of where our expectations are at the moment, considering a weekly 5-wave drop this side, and we had the bounce upwards in February 2023, we come down, and so we are looking for 10 to 17 cents. People might call me absolutely crazy, all sorts of different names under the sun. And they said the same thing when I was saying that 𝗲𝗂 had to crash down to 3 cents from where it was at 28 cents, right? And people were calling me all sorts of different things. Ultimately, the structures are the structures, and unfortunately, things are bearish for Polygon's 𝗲𝗡. Now, obviously, we have FTX liquidations. There's going to be Celsius liquidations. So many things that are going on that might see downward price pressure for Polygon's 𝗲𝗡. So it's one of those things. So it might not go down this low. And if it does, it's going to be a fantastic opportunity to load up on 𝗲𝗡 if you do see something like 17 cents. However, you know, for now, this is what it is, and I can't really kind of say anything other than that. It doesn't give me a bullish structure to the upside at the moment. We had that 5-wave move over this side, so if we start with 5, we must end in 5, meaning our minimum expectations must be double bottom at 31.6. And so until those structures complete, 𝗲𝗡 is where 𝗲𝗡 is. Okay, so it's going to be a great opportunity to accumulate, in my opinion, on the downside here, but it doesn't subtract us from the next bullish market either. This is just a correction, and I suspect we are going to see very, very, very nice prices for Polygon's 𝗲𝗡 in that next bullish market. A new all-time high, because again, we start with 5, we must end in 5. And so our next move to the upside, I think, would be somewhere realistically between kind of $4.42 and $12.36. That's going to be where I think we're going to see 𝗲𝗡 in the slightly longer term. So guys, I'm going to wrap this video up right there. If you have found it useful, informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, what are you waiting for? Check it out, linked in the description below. Until the next one though, guys, have a fantastic day.